All right, there we go. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in these markets and how we are trading them. Today is Thursday, July 18th, and semiconductors take a hit. The S&P ends its longest streak without a 1% loss going back to 2020. The NASDAQ is hammered. Jobless claims come in at the highest they've been in over a year, and Domino's Pizza in a free fall after earnings, plus 5 new WTF signals to take a look at. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and today I am running the show by myself. So normally Marcus is with me by my side, but today it's just me, but I promise that you're still in good hands. And with that said, let's see what's going on in the markets and take a look at the S&P here. So the S&P, after just a real strong run here, it was Thursday last week where we started to see this rotation really starting to kick in, where the Magnificent Seven down big, but there was a lot of green in the S&P 500 if we looked at individual names. And if we compare this recent move to IWM, which is an ETF that tracks the Russell 2000, right around the same period. So this was Thursday when the S&P was down 0.9%. The Russell jumped 3.6%. So this is where we started to see this shift from some of the mega cap stocks into these small caps. And a lot of this tied to the probability of a rate cut in September, right? Because a rate cut in September and starting this rate cut process, if the Fed continues with it, is definitely good for some smaller companies and smaller businesses. So cuts are good for smaller businesses where that pressure with higher rates has held some of these companies down a little bit. And if that is elevated or alleviated, then it seems to be that this is the new play. And that explains this huge jump in the Russell 2000 and small caps. Now, yesterday, the S&P was down. The NASDAQ was hammered. The Russell down 1%, 1.1%. Today, the IWM Russell's positive for the session after being higher, but we see a similar situation taking place today that we saw yesterday. Not with the same volatility, not with the big drop, but yesterday the S&P is down 1.4%. And here, if we go to a 5-minute chart, we can see that the S&P 500, after a higher start, rallied a little bit, filling the gap, and now just kind of choppy, where the Dow started lower, rallied, filled the gap, but is now positive. So blue chips and the small caps are winners right now, where the S&P 500 and then the NASDAQ are losers right now, which is a little bit interesting. Now we can take a look at the heat map here just to see where these gains or losses in the S&P 500 might be seen. NVIDIA up a little bit, Microsoft down 1.1%, Apple down 1%, Google down 0.9%, Meta up 1.3%, Amazon down 1.2%, and Tesla up 2.5%. So out of the Magnificent Seven, 4 of the 7 are down. And we see here that there is a decent amount of green in the S&P 500, although healthcare's taken a little bit of a hit. Looks like there's some red there. With Eli Lilly down 5.3% today. So there is some green, even though the S&P 500 is down for this session. And again, the mega caps a little bit mixed, but leaning towards more losses than gains. And that explains why the S&P 500 is down a tiny bit and the NASDAQ is also lower. Now, with these moves, the VIX, the fear index, has been trading in these crazy low ranges. And for those new to the VIX, it's known as the fear index because it does track S&P 500 option volatility. So when there's greater volatility in the market, traders and options traders in particular bet on bigger movement taking place. And with those bets, the volatility gets priced into those options, meaning that traders are expecting more movement. And this typically accompanies moves that are lower in the market, or when there are some events that could be concerning, some market moving events on the horizon. And we see here that the VIX now trading at levels that we haven't seen since May, right? This spike here happened at the end of May. We're actually above that, trading around 15. And that is good for option premium, but it just shows that there is some uncertainty in the market right now. And this change here, we're rising to uh, averages that we might see historically over longer periods of time. The VIX being around 12 to 13 is on the extreme side, and very low. Being at these highs also extreme, but we could say that maybe a 15, 17 average would be what, normal. And even if we look back a couple years here, going back 5 years, we see that 12 to 13 range, extremely low. Of course, you had this crazy spike during the pandemic that was an outlier. This isn't normal. But getting back to 17 would 17 and a half would actually be a nice little level for the VIX if we do have some more volatility that actually stays. So interesting to see what's going on in the markets. And let's take a look at the economic calendar here, because there isn't a whole lot going on the economic calendar this week. The focus is going to be on earnings, but here we see that unemployment claims coming in, 243 Americans filing for unemployment for the first time. This is higher than expected. 22.9 was the forecast, 229,000, which is also higher than the previous reading of 223,000. But what makes this interesting is this is the highest that we've seen in unemployment claims since late 2021. So a bit of a spike there that is a little unexpected. We've seen that with what the Fed is doing and what they're anticipating, the economy seems to be a bit resilient, with stronger than expected retail sales and jobs being decent, but a pop in unemployment claim numbers. And we could look at the E-mini S&P to see what the reaction was since unemployment claims come out an hour before U.S. markets open. And we see here that in the morning, a little bit of a positive reaction to those unemployment claims rising, which again it's kind of what the Fed wants, the labor market to weaken a tiny bit, and to see inflation falling. But since then, we've seen a bit of a reversal in the overall market, and that's that move lower that we see on the chart in the E-mini S&P and also the S&P 500. Now let's take a look. We could look at the SOX, which is the Philadelphia Semiconductor Index, because semiconductors, with this rotation, taking a bit of a hit. And there's really two reasons for this, right? You have the rotation where you're coming out of some of the mega caps and also some tech names that have just been on fire, and then a little bit of profit taking, right? Putting that money into some small caps. But also yesterday, the Biden administration, they said they're considering tougher trade restrictions if companies continue granting China access to U.S.-made technology. So that led to some bigger drops yesterday in semis. We could look at MU as an example. So Micron dropped down 6.3% yesterday, down 3.4% today. NVIDIA was down yesterday. Right now, really trading flat after a stronger start. NVIDIA down 6.6% yesterday, now really just flat for the trading session. So semis taking a bit of a hit. Now, we could also take a look at DPZ, Domino's Pizza. Domino's Pizza getting hammered here. They reported better than expected earnings. They did have a miss on revenue. So This loss here, the investors didn't like this one. Domino's Pizza down 12.5%. Whether you love or hate Domino's, this is a pretty big move here. Let's actually come over to PowerX Optimizer because we talked about this one with our mastermind group this morning in our mastermind check-in call, and DPZ has popped up on the wheel list as a potential candidate. Now, with the way that we like to trade earnings, we like to be a little more conservative and see if there is an overreaction to earnings when you have a good quality company, a good quality stock. And this is where, if we look at the numbers with Domino's Pizza, and here I could go zoom in just a little bit, make that a tiny bit bigger. We see that Domino's does pay a dividend, which is about in line with the S&P 500 average. So it's not big, but they do pay shareholders. The PE ratio, a little on the high side, 32 would be slightly high. But not necessarily bad, just definitely something to consider. Annually, they have 5 years of net income, 5 consecutive quarters of net income. So with a quick snapshot here at the fundamentals, it looks decent. The PE ratio is a little bit on the high side, but looks decent. So the next criteria for us when we're trading the wheel, first is it a company that we want to own? And we want to make sure that it's profitable, and that there's a net income quarterly and annually. Ideally, it pays a dividend and has a lower PE ratio. But then the next question is, are we able to sell puts if we are assigned, if we do take ownership, right? We sell an out of the money put, which just by the nature of options and out of the money options, there's a higher probability that they expire worthless, right? So we already have that advantage. But if the stock drops, we want to make sure that we are selling a put at a strike price where we want to own these shares. And for us, it's important to look at the ranges that the stock has traded in the past, and where buying pressure has exceeded selling pressure, which is another fancy term for support, right? So if you see these lows and there's these ranges that historically have been bought, right? DPZ kind of trading in this range here between 300 and maybe 400, nice little range. And then last fall and going into this year, rallying and running up. But when I look at support levels, you could make a case for maybe 300 to 335, somewhere down in these region or this region. We kind of are pulling back right to the highs here and to this area of congestion in the first month of 2024, but I don't see a true strong support level. It really looks like this is a falling knife. I could have a little more downside here. So the scanner is picking up the 395 put, which isn't that bad. I mean, you get 46% annualized in just one day. So not too bad if you could get a buck on this, and it's a 395 strike, but not for me. A little too aggressive. I just don't see a strong support level here. So I decided to pass on this one, and I could even flag it and say, no, I do not want to trade it. So this one is a pass, but a pretty decent reaction to earnings. We'll see if this is the bottom or if there's some more downside there. Well, we might as well talk open positions here, and we could take a look at the wheel strategy and wheel positions. We are still in CSIQ if you've been following along. CSIQ, some interesting movement here. So dropping after we had the Trump effect really kick in over the weekend. With that, just unfortunate and horrible assassination attempt. And then the probability of Trump becoming the next president with, more backing after that event. It led to some Trump winners if he is elected, and Trump losers being seeing exaggerated moves on Monday, right? So solar could potentially be a loser based on the Trump administration policies if he is to be elected. And this is where there was a big reaction to the downside in solar in general, CSIQ falling 11%. I do believe that this is an overreaction. I think it was a knee-jerk reaction. And also, you know, I mean, to be honest, even if the probabilities of the Biden versus Trump were a little bit mixed, it started to shift after Biden's debate, right? Or the presidential debate between Biden and Trump uh, getting better reviews after that debate, right? So we kind of started to see that. I wonder just how much of this is already priced in. That's the tricky thing when it comes to trading, because when we're buying shares of stock, we're never buying it based on what we expect it to do today. It's what we expect it to do in the future, right? So if how much of that is already priced in, or if you sell stock, right? You're not selling stock that you own because you think it's going to be higher in the future. You're selling it because you think it's going to be lower in the future. And I wonder just how much of this is priced in. Either way, I truly felt this was an overreaction on Monday. It's not to say that there can't be some negative consequences with CSIQ if Trump is elected. And I mean, please let's just keep like let's keep the politics out of it, right? I really appreciate our group because it doesn't turn into this rant about who's better, Biden or Trump, right? We really focus on trading, and I love that. And I would love for our comments and discussion to stay that way, because you could have strong feelings about who should be the next president, and we could talk about how it might impact stocks. But let's just play fair and be nice, okay? So here, yeah, is this an overreaction? I believe so. And after a few days, we're now back where we were on Friday, right? So I think that it's been proven that it was an overreaction. Still, there could be some. It might be that we don't move as quick as I would like. I still believe that CSIQ is positioned to move nicely with rate cuts, right? Ultimately, rate cuts, inflation, lower rates, I believe is the biggest factor here when it comes to CSIQ. So there can be some temporary price fluctuations, but it doesn't change my opinion on CSIQ because I truly believe with the momentum of a rate cut, whether it's in September or November, I do believe we're going to get at least one cut this year. And if we get two, I think that momentum, regardless of what happens from a political perspective, that's really going to help this stock. So I think that we're in a good position with this last rescue at 1550. I mean, we're already trading a buck, actually, yeah, buck 50 higher, buck 40 above where we did that rescue. And I got paid 50 cents on that. So loving the CSIQ reaction, but hoping that we now that we fill this gap, that we take off from here. So CSIQ up a little bit, still in this one, both Marcus and I. Let's take a look at Halliburton. Halliburton, interesting because we had the negative reaction on Monday because of the political landscape, but then a positive reaction with Halliburton on Monday, and this thing just went crazy. Look at this, up 1, 2, 3, 4, 5, 6, 7 consecutive days. Looks like we're going to have another winning day. Now, Marcus and I, we have a position. I sold calls at 34.50 and 36. So half of my calls are at 36, half are at 34.50. Marcus sold calls at 36.50 and also 34.50. Now, this is a nice big move, but it's important to consider earnings tomorrow. So earnings tend to be a little hit or miss with Halliburton, and it will be interesting to see what happens tomorrow. Now, if we look at the expected move here, based on current prices, we have an expected move on the high side, 37.77, and the low side, 36.05. So you could say that based on this standard deviation and being above this, we could be above this one standard deviation or below. But this means that there's essentially a probability of an 84% chance we'll stay above 36.05. It doesn't mean that we won't, that we can't drop below 36.05, but it makes for an interesting, potentially an interesting day tomorrow, because if we rally higher, we're going to get called away. There's not going to be any premium to get on a roll. And if we rally after earnings, then we're out of the trade and we're looking for new opportunities, which is fantastic. We made some nice money on Halliburton, and it could be time to move on. If we pull back and we're near this lower expected move level, or even a little bit below, then we're in a situation where our 36 calls, or 36.50 for Marcus, could be now out of the money, so they might expire worthless, or it could set us up for a nice roll opportunity. So that's something I'm definitely going to be looking at tomorrow, depending on where Halliburton goes after earnings. If it drops down to 34.50, then our 36.50s are going to expire worthless, and maybe those 34.50 calls we can roll for some nice premium. Right now, that would be an exaggerated move based on what traders are betting on right now, what options traders are betting on, and that's being priced in. So getting down to 34.50 would be an extreme, but getting down to 36 or in this zone might set us up for a nice roll. So we'll talk about that tomorrow in our video and let everybody know what we decided to do. But I always like to think ahead, what could potentially happen, and does it make sense to hold the trade into earnings? For me, it does in this situation. Now, another one, UPS, just doing exceptionally well over the last couple of sessions. And we see here that yesterday just barely made finished the day positive. We have 1, 2, 3, 4, 5, 6 consecutive days higher for UPS. Right now, I'm making a new high in this move, and up for the day 0.2%, kind of flirting around with whether or not it's going to be a positive or negative day, but UPS looking real good, and just waiting for it to move a little bit higher for me to be selling calls. UPS also has earnings coming up. They will be released on Tuesday of next week. So UPS, keep on moving up. Keep on moving up. Do you want to see the new WTF signals? And if you do, please give the video a like. This would be your moment. This would be your time to thank us with a like if you like these videos. All right, let's take a look at the WTF analyzer. And we got into Schwab yesterday, and Schwab's been an interesting one, just getting beaten up after earnings, a big drop, gapping lower, getting filled around 66.26 with yesterday's move and entry. Right now, trading at 62.46. There is a stop loss for me in the market at 58.62. So Schwab not behaving like I wanted to, but still in this one it's not over yet. And we'll see what happens when the dust settles. But right now, Schwab not working like I would want it to, but I am in this trade. And it was according to my trading plan. Now with new signals, we had a couple of new ones here. AMD was a new signal, and AMD opening slightly higher and pulling back. This was actually one that Marcus and I traded. Amazon, a new signal. This one opening higher and pulling back. Marcus and I, we decided to hold off on this one, and we decided to consider it potentially as an OBE entry, which is open below entry. So an open below entry with our scanner just gives us opportunities on stocks that have actually traded lower, and we have an opportunity to get in at a lower price. AMAT, another one that we decided to trade today, opening higher, pulling back a little bit. So down a little bit on AMAT. AVGO doing the same. Not real big moves, but the three that we got into, AMD, AMAT, and AVGO, down a little bit today. CEG was another one that popped up. Now we decided to pass on this one to see if it's an OBE trade that we can consider if it pulls back a little bit more. This is where we wanted to add 3 new ones, and we thought AMD, AMAT, and AVGO were the best, watching AMZN and CEG. Now this symbol CEG, although it's part of the S&P 100 or NASDAQ 100, it's probably S&P 100. So it's part of an index that I feel comfortable taking signals on and trading. But we see that it doesn't have a full 5 years to analyze. We go back to January of 2022. So that's why we get this warning here. I would still consider it as an OBE trade, but that was one reason we decided to hold off and take the others instead. So could be interesting with this recent pullback. There's definitely some opportunities on the WTF scanner, and we will see how those work out. Earnings are going to be the focus this week and next, and for the next couple weeks. And we see that today after the bell, Netflix reporting. So it'll be interesting to see the reaction there with Netflix. If we look to tomorrow before the market opens, we have American Express and the company that Marcus can't pronounce, Travelers, Halliburton. So a couple of companies reporting Friday. American Express, probably the biggest one. Schlumberger, also decent. And Halliburton, hey, we'll see how it goes. So with that said, Marcus isn't here. I beat him by default yesterday with the joke, and we always like to wrap things up on a positive note, maybe a negative note if you think these jokes are absolutely horrible. But here's one for you. Do you know what Forrest Gump's password is? I do. 1 Forrest 1. I hope that made you chuckle, or at the very least, just made you shake your head and wonder why we tell these jokes. But hey, we're always up for a good laugh or a good cringe. With that said, if you like the video, please give it a thumbs up. If you're new to the channel, please subscribe. I hope this video provided some content that helps you. Take a little look and see some insight here on how we approach the markets, how the PowerX Optimizer works, and how the strategies that we're trading, how we identify opportunities, and hope that helps you out. With that said, we'll see you tomorrow. And until then, happy trading, everybody.